Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, I'm going to give you a wrap up of the day's trading action. Well, it was a continuous day when we have seen the markets falling in trade. 4 straight days of losses is what we've already seen on the Sensex and the Nifty. However, the good part was that some of the losses were recovered towards the end of the session today, although we did manage to end in the red. But the Sensex and the Nifty, the kind of worst move that we were seeing in the first half of the trade, sort of got recovered in the end. The Sensex moved up or recovered almost 420 odd points throughout the trading session. And it managed to end above the 59,000 mark as well. That was breached in the first half of trading session. Let's look at the closing levels. 59,037 for the Sensex, down 427 odd points or 0.7% in trade. The Nifty also shed 140 odd points and ended at 17,617, which is lower than the 17,650 crucial support level that everybody's been talking about. Remember, 17,700 consistently was a crucial support for the Nifty, which many of the experts have been highlighting. And now the supports are actually moving lower further. Now, when we see the other indices, the sectoral indices, we've actually seen the banks slipping a lot today, but FMCG has really performed. In fact, the FMCG is the only sectoral index that managed to end in the green. Barring that, all the other sectoral indices did slip in trade. Talk about capital goods, pharma, IT, metals, oil and gas, and realty. All of them were down over 1%. The IT stocks, especially, have been on a declining trend throughout this 4 trading sessions of losses on the major market indices as well. And that's perhaps mirroring the impact of the fall that we've been seeing in the global markets, the mother market, US especially, where the Nasdaq has been feeling some pressure on the IT stocks. And perhaps the trend has been reflecting here as well. Now, overall, if you see in the last 4 trading sessions, the Sensex has slipped over 2,100 points, and that is a cause of a concern. A lot of experts are really trying to understand whether this is a trend reversal of sorts, and we are going to be seeing further slippage on the index, or will this be again seen as a short kind of a blip, and then again we can see some smart recovery. Well, today's recovery does give some hopes to the bulls that all is not lost yet, and you may see bulls returning on the street in the next week, perhaps, even though this week was ruled by the bears, and that they have tightened their grip as well. We spoke to Shrikant Chauhan, who's the head of equity research at Kotak Securities. He said that the Indian equity markets have corrected this week in line with the global market sell-off. He also said that the rise in US bond yields and also the expected tightening of the monetary policy by central banks is somehow weighing on the investor sentiment. The 10-year US Treasury yield has moved higher this week, hitting a 2-year high almost. And thereby, the Indian markets and the benchmarks, the Sensex and the Nifty, both have corrected 3% this week as well. Despite the weak market correction, however, he does believe that the BSE small cap index managed to touch a new high this week, outperforming the larger indices in line with the broader markets. And most sectors saw some profit booking, especially in the IT sector, which performed quite poorly and gave a negative return of 6%. That's the most losing index this time around. Crude oil prices, however, have continued to march onwards and upwards in this entire week, with the Brent crude now inching closer towards the $90 per barrel mark. And perhaps that's another reason why the market sentiment is taking a beating right now. The FIIs have continued to be on a selling spree. Yesterday, we've seen 4,000 odd crore rupees of a sell-off by the FIIs in the Indian equities, and that's perhaps not been taken in too well by the markets today. Apart from that, of course, the earnings are quite mixed. Some of them are actually quite below the expectations as well. And that's also one reason which market experts are highlighting as could be the cause of the overall market fall or the sentiment taking a beating. Let's look at some of the stocks that actually were in news because of the earnings news flow. Hindustan Zinc Q3 earnings revenue was 7841 crore rupees. That was seeing a jump from 5900 crore rupees as well. The profit after tax was clocked in at 2700 crores this time around in this quarter versus 2200 crore rupees. So both the top line and the bottom line have seen an improvement. The EBITDA has also moved higher at close to 4,400 crore rupees, up from 3,300 crore rupees as well. So that's again a positive as far as the Hindustan Zinc is concerned. And these are year-on-year comparisons. Heritage Foods, when you compare revenue from operations, grew at 667 odd crore rupees. That's taken a bit beating yet again. and profits have also slipped to 208 crore rupees. So sharp decline on the profit and the revenue front on a year-on-year comparison. So the stock will be definitely reacting to the poor earnings this time around. Earnings impact also included the like of say Supriya Life Sciences. The shares tumbled 6%, even though the profit and revenue jumped. Actually, quarter three earnings included a revenue of 117 odd crore rupees. And when you talk about the profits also, they jumped at 396 odd crore rupees this time around. So keep an eye out on Supriya Life Sciences as well. IDBI Bank, well, here if you talk about the profits grew at about 578 odd crore rupees on a year-on basis. We have seen an improvement. The gross NPAs were also almost stable at 34,405 crore rupees versus 34,408 crore rupees on a sequential basis. The net NPA has just very slightly moved on a sequential basis too. Polycap India has reported the profit and revenue both growing marginally over last year when you compare from the last year same quarter. However, the stock was down 2%. Adani Wilmar, the IPO space is getting action as well. The Adani Wilmar has set a price band of 218 to 230 rupees per share. That space will be keenly looked at as well. Zomato was in focus today. The stock hit a 52-week low. It slipped below its listing price as well. So that's going to be, something that all the investors of Zomato will be watching out for. Shoppers Stop, however, turned out to be an outperformer. 16% of a jump as soon as the company, returned to black in Q3. That's been a positive, and that's what exactly we had mentioned in the first markets today morning show as well. Bitcoin, however, has slipped below the $40,000 mark. Overall, the experts do believe that notionally, if you speak over the last four odd trading sessions, investors have lost close to 8 lakh crore rupees. There's a dent in four straight sessions. So that's going to be a sentiment dampener for sure. But we do hope that there will be positive triggers and news flow coming in over next week. To support the market sentiments and the bulls return further as we inch closer to the big event that is going to unfold on 1st of February, the union budget. We'll keep you posted with all the developments in the world of business and stock markets as well. And for that, you need to like this video and subscribe to our YouTube channel so that you don't miss out on any new buzzing news in the world of stock markets and business. Thanks a lot for tuning in for now.